Higher yields require high-performance crop nutrition. Through fusion technology, Micro-Essentials is designed to increase nutrient uptake throughout the growing cycle. The unique chemical composition of Micro-Essentials creates an acid zone around each granule. Lowering the pH promotes the formation of dihydrogen orthophosphate, a more readily available form of phosphate, resulting in increased nutrient uptake. With Micro-Essentials SZ, plants more efficiently take up zinc because each nutritionally balanced granule delivers zinc evenly across the field. Micro-Essentials also contains small elemental sulfur particles designed for faster oxidation to sulfate and increased uptake. The proof is in the performance. Research shows that plants take up nutrients more efficiently with Micro-Essentials compared to traditional fertilizer blends, resulting in higher yields and higher profitability.
Good afternoon. Welcome to the Big Iron Farm Show. I'm Don Wick from the Red River Farm Network, and we are proud to bring you our forums each and every day. We've had some really good sessions here and another one coming up. Take note, we are live streaming these programs too, so if you miss these sessions face-to-face, or if you want to catch one that comes tomorrow or Thursday, we certainly can find those on YouTube on our Red River Farm Network channel. We're going to talk a little bit of what's going on in the land market. Good crew here from Farmers National Company, Kyle Nelson, Eric Skolnis, and Andy Goditis. Gentlemen, appreciate you being with us once again. It seems every year when we sit down and talk, at least in recent years, the value of this land has held up, and I would guess the commodity markets have something to do with it right now, but it does seem like we're again in that trend as we go into the winter season.
Yeah, we've been on a strengthening mode. We've seen some really strong land sales going back to last winter. And I say right now, my sense is kind of people are waiting to see what's going to happen. But I think we're going to see, there's been an absence or a void of a lot of good land for sale. So I think we're going to see some real strength coming along the road. And we've got a lot of listings company-wide. We've got 45 auctions, I think, between now and November. We've got a number in this region, so we'll see how it plays out.
Auctions, why do you see that trend?
Well, in a strong market, I guess that's always the way to test the market, and technology's in play with that too. Using the technology to do it online, that's becoming the accepted way to do it, whether we do it just online or whether we do it live auction and simulcast it on the internet. That depends on the ground and where it is and that sort of thing, but I think people have grown accustomed to it. They like the convenience, they like the confidentiality of that option, so I think it's here to stay.
Obviously, there's been a lot of concern this year about what could happen with taxes. Has that been a factor on what's going on in this land market here?
Yeah, we've been having a lot of conversations with clients that we work with, not just recently, but really started back, earlier this spring, once the proposals were being made. Discussions were were being had with their accountants and with their attorney and with their real estate agents about the impacts, I guess, of what could happen if they decided to sell, and the uncertainty. I think we're seeing some of that come into play this fall with sales coming online. I guess we'll see what pans out here.
And do you think that may have brought more people to wanting to sell this time of the year because of the tax, all the talk of stepped up basis and everything else?
I do, yeah. I think had a lot more conversations in that regard. Whether it's clients who are deciding, hey, now's the time to sell. They're monitoring that closely and saying, if we missed the peak of the market back in 2012 or 2013, we're seeing values as close to that or touching up against that now. Now's the time where we want to take a close look at that and consider it.
One of the things that I would add is that the baby boomer transition is starting to happen between the families deciding what they need to do with it. That's beginning to play a larger factor in what I see.
Yeah, turn your mic on.
Now it is.
There we go.
One of the things I would add is the baby boomer transition. A lot of the families are meeting and deciding what to do with the property and deciding maybe now is the best time to liquidate the property.
Drought obviously has been on everybody's mind this year. What impact has that had on the land market, if any?
To be determined. We've had a lot of sales in Iowa here late summer, and the drought is much less of an impact there, if not non-existent. It's been through the roof there. A lot of active bidders. I just talked to our auctioneer earlier this week. Usually you might have 3 to 5 active bidders and whatnot, and now it's 5 to 10, and pretty much all kinds of ground. Now up here, will it play out quite like that? I guess that remains to be seen. But I do think good land is always in demand, and I think we're going to see some strong sales on good land. The question is, in my mind, the second and third tier. Will we see the strength and the interest in that? What do you guys think?
Yeah, I agree. I think there'll still be good competition on good quality, high quality farmland, no doubt. As we've seen even in prior years, it's that more average quality or marginal quality ground where maybe we won't see as much competition or competitive bidding, I guess, environment on that ground.
As far as the drought would go, some areas got a decent amount of rain and probably got a pretty good crop. And with these high prices, you could see a pretty good increase in values. Some of those areas that maybe didn't see the rainfall and maybe don't have the yield there that they'd like to have, the crop insurance with the high commodity prices is going to help offset some of that. That will keep that land flat maybe, but certainly those areas that got a good crop, I think it's going to be pretty good.
Has there been any change in marketing strategies as we look at buying and selling land?
Technology would be the big one. The online auction. I mean, that's, like you said, that's a key to be able to provide that option. Just social media marketing too. I mean, I've seen some of our competitors, and that's exclusively what I wouldn't have known about it if I didn't show up on my Twitter feed. I don't know if we'd go that far to only do that mode, but yeah, taking advantage of those functions, and the next thing is down the road is something we maybe even thought of yet.
One of the things I'd add is on the internet, those pop-up ads are on the side of the screen. Those are click-to-pay type ads, and those are becoming a lot more popular. And I feel that those are a really good way to reach people that are looking to buy land or sell land, is that the computers track what you're doing, and then we pay for advertising. But if you're looking for land and we pay for those ads, we can kind of coordinate them so they do find the people that are trying to buy land or sell. And I think that's a big way, a new way that we can pinpoint and find people that are looking for ground a lot better. More use for the dollars.
What's the time when we generally are selling land, and has that changed over time?
Well, traditionally it's now through the spring, but I think that's changing. I mean, I think, even in the summer, we see land sold all year long. And I think that's going to continue. It's I always say, people, when's the best time to sell? And I always say, well, it's the day after the commodity markets go up 20%. I mean, you can try to cherry pick your perfect day, the day the beet payment comes out or something like that, but you never really know until after the fact. But there is something about having the crop harvested and in the bin and that sort of thing. But it's 12 months out of the year, pretty much.
And I think it also is what are the goals of the seller? Is it their goal to close and have the money in a certain calendar year or a certain tax year or by year end? Once we know that, we can kind of tailor it and say, and advise them, here's about how long it's going to take to market your property and close on it, and we can kind of work backwards from there. So.
What if you have an existing lease on that land? Does that have any factor?
That can be a very significant factor on if you even decide to sell your farm. And the market lease could be at market levels, it could be below market, but in any case, most of the purchasers want to get on that ground the next year, and having any sort of lease is going to deter some purchasers, and if that happens, it can significantly reduce your price. We've had sales where we've had market rents on a property for I think it was 4 years. It wasn't the optimal situation, but that property sold for 25%, or the high bid was 25% less than what the going rate was, and the deal on that sale was the lease, and that was it. The farm was a great farm, and just the lease wasn't a factor. So when we have that situation, I'll try to visit with my sellers and have them, if we want to maximize your dollars, that we probably need to wait till that lease is over. Let's do that, and let's wait till next year, and if that's in the goals that they want to do, it's something that usually happens.
One thing I would say too is to landowners is know what's in your lease. I was involved in something this year. I'd appraised it for the family, and they offered it to their tenant. This is last spring, and he turned it down, and I said, I think I can find a buyer for you. I need to see your lease. Well, there was a first right of refusal in there that was quite advantageous to the farmer, and they were unaware of that. And I said, you can't market this until, you've got to wait 6 more months to even try, because, and they were completely oblivious to that clause was in the lease. So just know what's in your lease.
What's the typical, or if there is such a thing, on the length of a lease?
Most of the leases I have, I mean, it's up to the landowner and what they're comfortable with. A lot of times, most common in our region, 1-year leases, 2-year leases. There's 3-year leases out there. Most of the ones that I'm probably half and half on in what I've got between 1-year and 2-year leases. So
things can, as we see this year, things can change quickly. So
yeah,
it's to have a 3 or 4-year lease for both sides. It's just better to kind of readdress that on a more consistent basis, and just become more of a standard.
Yeah, I've got a number of farms that I manage for clients where we've been on year-to-year leases and been the same operator on the ground for 30 years. So, when we say 1-year lease, it doesn't mean 1 year and gone. We're looking for someone else. A lot of times it's the opposite of that. It's their dad farmed it before them, and so on. It's just in that instance, in that relationship, that landlord prefers 1-year leases.
We don't have a lot of turnover on our tenants, so basically somebody retires. That's for the most part.
Mm-hmm.
So is there any trend happening in the rental market?
Well, it's to be determined. We're just getting into the leasing season right now. Having those conversations with our clients and with their operators. Big picture, I guess it's our opinion that cash rents will trend upwards, similar to what land values have done year over year as well. In some situations, there may be minimal adjustments. Maybe it's 5%, maybe it's 10%, maybe that rent has been closer to the market. over the last few years. And then on the other end of the spectrum, maybe you've adjusted over the years and you've had the same rent for 4, 5, 6 years in a row, and there'll be maybe some bigger adjustments made, 10%, 20%, maybe more. So
I've got a fair amount of flex leases on my farms, and the goal of that is that it floats with the market. So I don't, for my personal situation, that's going to take care of it, not me deciding that, the rent's got to go up 10%, 15%, or something like that. So therein lies the advantage of a flex lease, in my opinion, for both sides.
So as soon as the wheat came off, it seems like everybody had tiling going on on their ground. We've been seeing obviously a lot of trend. What impact do we see on some of those tiling projects, both on rental arrangements as well as on a land sale?
Well, I can talk about the land sale part. Eric, maybe going to handle the farm rental part. The tiling cost, if you do it yourself or have it done, is anywhere $800 to $1,200. Farms that we've seen that have sold, that have had tile on them, there can be various different reasons why the tile was put into it. It could just be high water content, or it could be a high salinity. And a farm that gets tiled for just poor drainage, that can be solved pretty quickly, and you can, in a sale of that type of property, you're going to gain on that cost of the tile plus maybe 10, 20%. In a farm where you install it for salinity reasons, it may take 4 or 5 years or longer before that saline is down enough that property is going to then sell for a premium above where it was at, basically improving that property.
On the leasing side of things, experiences I've had and see most common is, and what we recommend is, if there is a willingness on both sides between landlord and tenant to do some tiling improvements in the farm, and have that agreement be a separate or ancillary agreement to the lease, as it's typically a longer term agreement, and it depends on the size of the project, the scope of the project. We've structured them anywhere. We take the total cost of the tile project and amortize it over a period of years. Some projects it's 5 years, some years it's 10 years, but we amortize that over a period of time, and that way, if the operator is the one who's paying for it and installing it and making that improvement to the land, there's some assurance there that if the land is ever sold in that 10-year period, that they would be reimbursed the remaining balance of that amortization amount. So
I was on the road this weekend and saw these huge solar farm. I'm curious, those kind of situations, or windmill, those kind of deals, does that have an influence? You seen much of that?
Well, really hasn't been much sales activity with those two facets on it. I mean, the solar is, so far around here, it's pretty much been in a corner of a field. I did manage a farm not too far outside of town here where they wanted to put panels on the whole farm. And I think they might have run into some kickback locally with that, because of course that's taken all that land out of production, and which begs the question, why can't we put poorly producing land, why we can't put them on poorly producing land? But of course it comes down to their proximity to transmission lines and whatnot. So what I see on that kind of stuff is a farmer buyer doesn't put a lot of value on that, or they discount it. They want the land. An investor, when they factor that into the rate of return that they're looking for. So, there's kind of a mixed bag in there. I guess when I appraise that stuff and you're adding that income stream to the whole property, I tend to discount it quite a bit because of that. You got to look at who's your buyer, if it's farmer buyers or if it's investor buyers. And generally, a majority of the buyers are farmers, not all, of course, but.
You mentioned appraisal. Give me an idea when we're talking about that, the purpose really behind the appraisals.
Appraisals are usually done for lending, estates, for landowner wants to know what it's worth, if they're going to give it to their children, or if they're going to sell it to the tenant directly. a lot of my work happens to be done for lending work, 60-70%, and travel greater distances. But that's mainly the type of clients that I'm working for. Kyle may have a different.
We do. I do quite a bit of work for watershed districts too. But yeah, what Andy mentioned is the bulk of it. Yeah.
Does that translate into the value of the land, or is that no factor? The appraisal, what land's been appraised at?
I'm not following.
Is that the best way to determine the value of the land?
Well, yeah. I mean, what other comparable land is selling for is the crux of it. I mean, we look at other facets too, especially if there's buildings. We analyze depreciation and that sort of thing. But ultimately, it's what's it going for? So that's where we come in and doing the research, talking to people, knowing the characteristics of an area, because especially in the Red River Valley, it can change quick. I mean, you can have some of the best land next to some of the worst. So that's where hopefully we add value is knowing that and being able to convey that, because that's the one thing, you know, I talk about it about every year, but productivity indexes, which is a fairly new thing that came out, I don't know, a dozen years ago. And it's easy to understand, you know, 90 must be better than 80, but it's an oversimplification. There's more to it than that. And I guess that's where Andy and I come in, is we know that, you know, this might be 85 and this is 75, but I can tell you this ground with a PI of 75 is better. A lot of times it comes down to drainage, but, you know, because that's the other thing. In North Dakota, that productivity index is based on wheat, period. That's it. Minnesota, it's wheat and corn, and South Dakota is that as well. I think in the eastern half of South Dakota, they use corn, and then in the western half, they use wheat. So anyways, those are kind of things that we...
Right. One of the hardest things is from an appraiser perspective is when the market's going up drastically or going down drastically, is the sales you're using aren't always going to be most recent. They might be 3 months old or 6 months old. And we can't just jump to a conclusion as to where we're going. So having sales that are recent enough to establish a market are the best. Whereas if the market is relatively flat, there's a lot more sales that you get to use for that.
And that's the tricky thing this summer, and I knew going into it, I mean, we haven't had a lot of sales activity. And I can point to you a handful of sales that you could say that's 30 to 40% stronger than it would have been 12 months before. In one case, it actually sold publicly a year beforehand, and it was like somewhere between 30 and 40%. Well, how far do you extrapolate that information? Is that, you know, it's pretty dangerous to just take a little bit of data and just say that across the board. And usually in the summer, there's a minimum of sales activity, so that's been the challenge.
Yeah, two farms may have the same soil type in them and may have the same productivity index rating, and they could be really close to each other, and you could have a whole bunch of sales that support your value. But if one of the farms has different characteristics in it that the other one doesn't, they can either be positive or negative. There can be drainage, saline, rock, power pulls through them, transmission pulls, a drainage ditch. It can have poor access roads into it, field approaches. Those types of things come into play in an appraisal that, so you can't always compare one farm to the next because they have different characteristics within them.
But I'd add on the on the land management side, maybe it's just in the last couple of years compared to the first 12 or 13 years in the business, but I've had a lot of clients where they maybe own the land, undivided ownership amongst five siblings or 5 relatives, and oftentimes working closely with these guys, coming up with a value on the land and doing a division or parceling of it so that each party has a fair and equitable share has helped a lot. I've seen a lot of that in the last year or two going on. Some of them just want to own 100% of a tract of land versus a 20% interest in it, so been some of that going on. Some maybe the brother passed away and his children inherited it, so we've got all sorts of different layers or levels of age of ownership here. and some are wanting to exit and have the cash and liquidate and do what they want with it or do something else with it. And we've got others that want to retain an interest in the land. So that's another big area in what I do every day that an appraisal really adds a lot of value to that situation.
Kyle, I think I heard you say earlier that most transactions are farmer to farmer. What influence, if any, are the investors having on the market right now?
They've been there, and I would say it's probably, it seems to me increasing. I certainly have had more bugs put in my ear from non-farmer that say, I'm looking to buy, I'm looking to buy. I think one of the reasons is a hedge against inflation, and cheap interest, diversification, that sort of thing. But I usually say, it's usually the farmer that drives the price because there's emotion involved. The investor buyer, it's dollars and cents. They want a certain rate of return. There can be emotion. There could be a motivation to use 1031 money because they've got a certain time frame to use it. But it's usually driven by the farmer. But to put a percentage on it, depends on the area. Around Fargo or any bigger city, there's always a little bit more of an investor interest. Just speculation on an alternative use, whatever it might be. The more rural you get, it's probably farmer driven unless it's somebody that grew up there or something like that. But I don't know. If I had to throw out a number, it's probably 70 to 80% farmers that we deal with and that I see, as opposed to investors.
Of course, you need some competition to bring the biggest value. I saw just a couple of weeks ago, it was an outrageous number, like 21,000. Was that the one around Waterloo area? But it was two people involved in the seed business that wanted that particular piece of ground.
And that's unusual. Usually down there when it's, it can even be around here. It's usually it's a couple farmers knocking heads that result in that. So that is unusual, and I'm kind of struggling to figure out the logic behind that using, at that level.
How do you cash flow when you're looking at that?
Well, that's the other thing. I've always, it doesn't cash flow, but that really doesn't cash flow at that, or I should say it doesn't cash flow without feeding it, as far as farmland goes, so.
What about recreational land or some of that CRP ground, those kind of things?
It's been kind of just on a steady increasing trend. A lot of that stuff doesn't produce a lot of income, so it kind of flows with the rest of the economy. One thing I've seen, I've always said that it's the deer hunting land that tends to bring the money. I am seeing a little more interest, activity in waterfowl hunting land. And then the other thing interesting I'm seeing is, we call them shouses. It's like a shop and a house on some of this hunting land. Seeing a little bit of activity in that and seeing good money for that stuff. Guy builds, a little hunting headquarters, I guess, so to speak. So I found that to be kind of an interesting thing I've seen more of lately. So
I have a couple of recreational properties listed for sale right now in Polk County, Minnesota, and Cavalier County, North Dakota, and I'm surprised by just how many different people from different areas are looking to buy and watching that stuff, and got to meet a few new folks that way. But it's interesting to hear what they're looking for and what works best for them. And some people everybody has their different interests, what they want, and some want different things than others. And hopefully they can all find the perfect property for themselves. But it's
beauty in the eye of the beholder.
Exactly, yeah. Some guys, if it's the right piece, it doesn't matter what the price is, they want it. But if they're kind of wishy-washy and they really want something specific, if it doesn't have it, even if it's a great deal, they're not going to buy it.
You guys are involved in the ag stock situation as well. Any trends happening with crystal stock right now?
Sure.
Have we seen any sales at this point?
Yesterday. Yes, our firm, FNC Ag Stock, we're a federally regulated securities broker dealership, and we handle American Crystal sugar beet stock. We don't handle Mendac. The American Crystal stock last year was trending in the mid 3,000s, the upper 3,000s last year. The first sale that we've had this year was probably a couple weeks ago, which is very early, typically, at $3,800 per share. Now, these people that buy these shares, they don't get to plant 1 share per acre, so you have to divide it by the planting tolerance, which is about 83%, which brings it up to just under about $5,000 an acre for to grow American Crystal sugar beet stock. That number has been pretty solid lately, and that trend for value has been pretty flat, relatively speaking, to years before. And there continues to be strong demand for American Crystal stock right now. We do have people looking to buy at that price, and there will be some more sellers coming about. American Crystal has had quite a bit of change in their ownership policies, which is the grandfathered in for shares and beginning to rent to only family members or have other couple of exemptions that Crystal will allow you to have. That's going to slowly put some more shares on the market. I don't think it's ever going to flood the market, but the intent is to have the shares in the hands of the actual people that are growing the beets, and that's the policies that American Crystal has, and they'll get there. It's what and how they need it to be. So,
You guys get involved in like the shares with ethanol co-ops and such?
yeah, certainly. We trade a few ethanol companies up and down the Midwest, and the activity in the ethanol market has been very robust, and there must be some profit in some of these ethanol plants, that the equity interests or shares or membership units are all interchangeable, have increased anywhere from 50 to 100% in the last year and a half or so, which is different for that type of business to see, because for a while there it was not always as profitable as they would have hoped, but there is some profitability, and it's showing up in the price of the stock.
We promoted this session in our pre-publicity about the new normal. What do you say? What is the new normal when we're looking at the land market?
Well, I think it's technology and how it's, on the production side, of course, but even on our side when it comes to marketing, appraising, and managing it, the technology and how fast that's changing. You just look at, and drones potentially using that in all of those facets. So it's going to accelerate the change exponentially, I think, going forward. So being on top of that change is where we are and what we have to deal with and to move forward.
I'd say one of the biggest things is I think we were going to get there with online auctions. Technology was catching up and people were becoming more familiar with that. When COVID happened, it really forced the issue, and I think we were going to get there, but that certainly made it a jump start. And now I think most every auction around is going to be some sort of online hybrid type deal. People really like it. It's easy. It's transparent. You don't have to waste the day coming to the sale. You can do it right in your tractor, driving down the road, and wherever you want to be. So they're really convenient for a lot of people.
I should have asked from the start, what kind of services do you guys offer through Farmers National?
Well, the crux of the company, is farm management. We manage 2 million acres over, 35 states, something like that, 5,000 different farms. That's the core of the company, and then, of course, real estate sales, appraisals, oil and gas management. Those are the core functions of what we do. So, if one of us doesn't know some of those facets, we can find the person in the company that does.
One of the things that our company does that's really prevalent in North Dakota is the oil and gas management. With out western North Dakota, there's a lot of need for that type of service. And our company has a very large portfolio of work that we do out there that is kind of not very flashy, but it certainly is a need that a lot of people like that we provide.
And one thing, when you mentioned the solar thing, that's one thing that our oil and gas division is in charge of it, but is actively seeking a pairing of farms we manage and solar projects, to basically connect the two. So I thought we just started that, and I had a little bit of involvement with that this summer, so I thought that was kind of an interesting little offshoot.
Yeah, our Renewable Energy division reviews wind turbine leases, solar leases, things like that. A lot of language in them, so you certainly want to have someone look at it who knows what they're looking for. So.
And certainly none of us are experts on those things, so that's where it's nice to
So
Get
like
'em in
this
there.
discussion with carbon markets and those kind of things, will that be something we'll be discussing maybe a year in the years ahead?
I think so. We're early in it right now, from what I've learned of it, I guess. It seems like it's the wild, wild west right now, and in different markets, and what's my payment going to be? How much can my ground sequester? How much, what's it worth? I think there's a lot of that. Time is going to resolve that, and we'll have a better foundation, I guess, moving forward, and be able to have more diligent conversations, I guess, with landowners and operators on it.
Certainly with Farmers National, you got that foundation of a national backing of the company. I'm curious locally, what kind of presence do you guys have?
Well, I work in the Fargo office, not far from here. Eric is in Glendon. Andy's in Grand Forks. We've got a Lisbon guy in Lisbon, so we're kind of spread out. Hallock and Cooperstown.
So where are you guys located here at the show?
We are in Exhibition Hall. It's in the northwest corner of the grounds. We're near the east
end.
So.
Yep.
Great. A lot of times folks have questions they want one-on-one when it comes to these kind of things. You'll be available a little bit here for folks.
Yep,
or
absolutely.
you can track them down in the trade show as well. But good chance to talk about this new normal, what's going on in the land market. Kyle Nelson, Eric Skolnis, and Andy Goditis, all here from Farmers National Company. Please show your appreciation. I would take note, we got some caps to give away. You can sign up at the registration table. We've got a handful of $100 credit visas handing out, so sign up for those kind of things. We sure appreciate you being here and hope to have you join us for the seminars we got coming up the next 2 days as well.